and will it make compliance easier? And as the finance minister was pointing out, will this mean that legal disputes, in a sense, and question marks, will that be reduced as well?
Well, I think it's a very general question whether the cost of compliances will come down or not. We need to wait and see. But if I may just illustrate, one change, which is applying the maximum marginal rate of tax of 30% on individuals above 25 lakhs of income. I think this is clearly going to result in greater level of compliance, because the incentive for individuals to evade taxes has completely been done away with, and that will increase the overall tax to GDP ratio and certainly increase the overall tax collection. And I think the cost of compliances will go down. The other measure is what they call it as a computer-based risk management procedure that they will follow to pick up tax returns for scrutiny. So there are several path-breaking changes. Most of them are unprecedented. It is reformative. And if you take a medium to long-term view, I have no doubt in my mind that cost of compliances will go down.
All right. So that's
as
good.
Regards to your second...
Yeah, that's good news. You were talking about the tax compliance actually going up and the cost of compliance actually going down, Mukesh. But let's talk about some of the not so positive surprises, because we've been speaking with tax experts, and the sense that we seem to be getting is that the business of where foreign companies, even if partly managed in India, will now be treated as residents. Now, this is likely to throw up a whole host of litigation as well as create more controversy.
It doesn't surprise me, because the issue is very simple over here. They have kind of given now a narrow interpretation for management and control of a foreign company, clearly with an intent that India should not lose out on its tax base. So it certainly gives legislative tooth under the new tax code for the tax administration to tax the profits of the foreign company. But it is no different than what is happening today. The tax authorities are really extending themselves given what the current legislation is and taxing those profits. So I think the intent is very clear, and I think foreign companies now will have to be more careful from the point of view of the test of control and management, such that their profits are not taxed in India.
All right, let's talk about some of the other features really with regards to dividend distribution tax and MAT. MAT, we understand now, will be calculated with respect to gross assets, 0.25% of the value of gross assets, as well as the dividend distribution tax at a flat rate of about 15%. Take us through what you made of both these proposals.
Well, the minimum alternate tax currently is levied on book profits. This recommendation that it should be levied on a base of gross assets is a recommendation that was there given by Dr. Shom in 2000. And this is also aligned with global practices. What I am confused with and not very pleased about is the rate of tax. So the 0.25% MAT rate of tax that you mentioned applies to banking companies. For the other companies, it is 2%. And I think this 2% rate of tax, in my view, is very high by global standards. If you look at countries that levy minimum alternate tax as a percentage of the value of gross assets, the rate is anywhere between 0.5% to 0.75%. I think 2% is a very high rate. So if you look at a company that is capital intensive, it's making investments, it's building assets, I think 2% is a very regressive rate of tax.
Okay, it's the difference between the long-term and the short-term capital gains has been done away with. What kind of ramifications is that likely to have, or was this on expected lines?
You know, I have not been able to understand the rationale for doing away because the changes in the capital gains tax provisions are again path-breaking. So you have to read the change on long and short-term capital gains with this whole distinction about capital assets for business purposes and investment assets. And you have to read these two changes together. I have not been able to absorb what is the outcome of these changes, but no doubt that the distinction between long-term and short-term capital gains seems to me to be aimed at providing for a fixed rate of capital gains tax on transactions, whether they are long-term or short-term in nature. And you also have to read this provision with elimination of the securities transaction tax, which was levied in 2005 in lieu of exemption for long-term capital gains and a reduced rate of tax for short-term capital gains.
Mukesh, Siddharth Zarabi here. I wonder if you've been able to see one particular clause, and this relates to tax holidays for certain businesses. The code says that it proposes to substitute profit-linked incentives by a new scheme where a person would be allowed to recover all capital and revenue expenditure. It will be for the period of the tax holiday, and then it goes on to list several sectors on which it will be levied, for instance, business of exploration and production of mineral oil or natural gas and so on. Clearly, this is perhaps one part of the exemption. What does this really entail? And then if you could broadly take us through the overall exemptions that are being taken away for the corporate sector as well perhaps for the individual taxpayer also.
Well, I mean, let's look at the tax incentive provisions today. First of all, all of these changes are grandfathered. So currently, if you have a special economic zone or you're operating a power plant or any of those specified businesses, hospitals, so on and so forth, those will not be impacted. What it essentially says is that after the new code comes into effect, all the profit-linked incentive will now be turned into amortization of capital and revenue expenditure. So if you start any of those specified businesses after the new tax code comes into play, then you will get the benefit of not paying any taxes only until the time you have written off all your revenue and capital expenditure. These changes signal two things to me. Number one, elimination of profit-based incentives. So this whole concept that you set up a new business and 10 years you don't pay any profits is gone away. It also aligns with the overall government policy that we are not going to give away any tax holiday. However, in order to make sure that there is suitable incentivization for businesses that make significant capital investments in high risk and businesses where the payback period is very long, they will say that you will not pay any tax till the time you have written off your capital and revenue expenditure.
Right.
And as a matter of fact, the first signal for this was already there in the 2009 budget when they brought about the amendment in the manner in which you compute tax holiday for cross-country natural gas pipeline projects.
All right, Mukesh, we're running out of time, so very, very quickly, one of the other issues that seems to be causing a little bit of consternation at this point in time is the fact that the code actually proposes a treaty override provision. What do you make of it?
Well, again, currently as the law stands today, and if you look at the jurisprudence, it simply says that treaty overrides domestic law under all circumstances. The change that has been brought about in the anti-avoidance rules provision says that ordinarily the treaty will override the domestic law. But in case you have amended the domestic law subsequently, then that law will prevail over the treaty. So this universal rule of treaty overriding the domestic law under all circumstances will not hold good any longer. There are countries that have implemented these changes. I'm not very sure, and I'm circumspect whether India should have embarked on this, predominantly because we are a capital importing country and we will continue to be capital importing for many, many years.
All right, Mukesh Butani, we will leave it there. Of course, this discussion is by no means over. This debate will continue and the draft code is open for consultation. And we will be running a survey in association with BMR. We're going to be putting that survey onto our website, moneycontrol.com. It should be online tomorrow morning. So do make sure that you join in and vote on that poll as well. Coming up.